In the coming bear market, many will sink into the recession and drown with the rest of the economy, but I want you to swim. I'm going to show you what you need to do in order to survive and thrive through the forecasted bear market recession in crypto and equities on a global basis. You have finally reached the Nirvana episode that I have been building up to with the last 3 videos in the series and the Fed coin series, bull and bear cycle series, and now with this gold and silver series. I'm going to run you through a few different assets, how they differ from each other, and how you can actually achieve generational wealth from them. But obviously, before I get into that, make sure that you smash that like button. Make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Now, let's get into how you can actually go out and secure these assets for yourself. Now, let me just start this off by saying gold is going to be on the move in 2023, and you might be getting a very good opportunity to get in for inexpensive prices very soon. Though I am a long-term bull on crypto and Bitcoin in general, 2022 showed me that there are actually still just too many snakes in the grass for me to be aggressively buying crypto right this second. As a long-term hold, absolutely. And while the Federal Reserve is slowly losing power to the BRICS nations, the central bank's interest rate hikes are actually still destroying demand for risk assets like Tesla and Bitcoin. In this series, I've actually laid out exactly what gold is, how the markets worked, how they used to work, how they work now, and why I believe the fall of the US dollar could actually pump gold extremely, absolutely tremendously into the future. But the question still remains, how do I buy gold and where do I get it from? Not to mention, what do I need to know to get started? Well, here are a few options depending on your preferences. My bias is to actually buy the gold, physically get it shipped to you, and store it. You can do that through online metals brokers, and a lot of them let you pay in crypto. I actually have one in my description in case you happen to give a F. Use it, don't use it, doesn't really matter. Go do your research. If you want to buy some gold or silver, go ahead and do it. Now, the other most obvious way to buy gold is to search up gold shops on Google Maps to find results for gold sellers in your area. While this is not a terrible option, you do need to understand that you are likely going to be outmatched in every way when you walk into that shop. But because some of you will undoubtedly choose this option, I'll give you some brief tips. First, I say you are going to be outmatched when you walk into a gold shop or pawn shop because you have to understand microeconomics. The guy on the other side of the counter has likely spent decades learning about not only gold, but also sales techniques and tricks. These guys are only able to operate because they make a profit on what they are buying from you when they sell it. Now, meaning they are buying gold either wholesale or they are buying from distressed people who need cash fast. Now, don't get it twisted. I'm not saying that all shop owners are robbing every person that comes into their shop. Again, they would not be able to stay open if that were the case, but money's money, business is business, people have to provide for their families. So you have to assume that you are going to be paying a premium on top of the spot price for gold. And let's be real, if you go to a precious metals broker, you never get to pay the spot price. You always have to pay a premium. Spot is only for contracts on exchanges. So my first tip is to expect to be outmatched in knowledge, charisma, and probably negotiating skills. My second tip is to at least know the spot price when you walk in. You can literally just Google gold spot price and you should actually be able to find it pretty quickly. Then you can go to an actual precious metal broker website and figure out what it is that they tack on in terms of premium on top of that spot price, normally for whatever type of gold it is. And remember, all gold is different purity. There's 99.99%, there's 99.999%, there's a lot of different golds, different bars, different mints, different purities, all come with different premiums. So figure that out before you go in there. My third tip to give you the best chance at being able to negotiate is just be honest and authentic. Maybe play on their desires to see new investors inside of the gold market. Not that they probably care because they just want to sell you the gold, but try to inspire kindness from the person instead of trying to outwit them. They know every trick in the book. You may not. Now, hear me well. I don't want to totally discourage you from buying from your local shop, but just know that you can invest in at least 3 better, in my opinion, safer ways. The second most popular way to own gold in North America is by purchasing a gold exchange traded fund or an ETF through a brokerage like TD Ameritrade or Robinhood. And Robinhood is not Wolfer approved. I would always tell you to go to somebody like TD Ameritrade. An ETF can be purchased just as easily as a share of Apple or Microsoft, but the price per share of an ETF tracks the price of an asset or a bundle of assets. If you are tracking my thesis on gold, then you want to make sure that you are buying gold ETF that actually follows the spot price of gold and not an ETF that follows a bundle of gold producers. An example of these gold spot ETF are iShares Gold Trust, Micro ETF, which has the ticker symbols IAUM. This has a lower than average expense ratio of 0.9 and $1.1 billion worth of assets under management. Another example would be Granite Shares Gold Trust, ticker symbol BAR, which has an expense ratio of 0.17% and about $850 million worth of assets under management. Now, the last one I will mention is SPDR, and it is their gold trust. They've got about $53.5 billion under management and a 0.4 expense ratio. The obvious downside to owning an ETF as exposed to physical gold bullion is that you are actually trusting that the very same big banks with your gold who are shorting the crap out of it on the options every single day. But a lot of investors are able to look past this and still do very well in gold. Now, ETFs also have the advantage of being FDIC insured, but again, you're just trusting the same government to fulfill a promise to you. The same government that is aggressively inflating your dollars and suppressing the price of gold right now. But at the end of the day, it's your call. The ETF approach is the easiest way to buy and benefit from gold without having to store it yourself. If you're a big crypto trader or investor like I am, then you may actually also want to consider Uphold.com. Uphold is a platform where you can buy gold, crypto, and even stocks. It's actually pretty cool. And then second to last is gold futures. This is the method of buying gold that I least recommend because if the price of gold does start to really gain momentum, then the Fed may end up instructing the COMEX market that clears futures contracts to throttle the volume to prevent further speculation away from the dollar. In my opinion, I would rather have physical gold in that scenario. I would just steer clear of this method altogether because it also requires much more attention to the markets and deeper understanding of the way that spread order books work. The last and perhaps best way to benefit from the future rising gold prices actually brings us back to crypto. You can actually look in my description and use my gold metals broker, which is Bullion Max. If you would like to buy physical gold, silver, or any types of precious metals, you can actually buy it with crypto through Bullion Max. So I actually highly recommend this because when I bought all of my gold and silver, I actually bought it with crypto. And you can use stable coins, regular coins like Bitcoin, or even altcoins. So look into that because that is the easiest way to actually take advantage of what gold could do in the future. Own that stuff physically, take ownership of it, keep it somewhere safe, and let that stuff appreciate over time and create you some generational wealth. Now, I am going to give you one more bonus. There's a coin called PAXG that tracks the spot price of gold because it is pegged to the stable coin of gold. Now, according to their website, Paxos.com, each Pax Gold or PAXG token is backed by 1 fine troy ounce of silver stored in LBMA vaults in London. Each Pax Gold, PAXG token is backed by 1 fine troy ounce of gold stored in LBMA vaults in London. Tether has a similar one named XAUT, but Tether's a little suspect to me, so I'm going to stay away from that. The Australian government has actually launched their own called PMGT as well, and is actually backed by Perth, Australia minted gold. That is actually probably the cheapest way to go if you don't want to actually own the physical gold. And there's usually 0 on-chain fees or very minimal on-chain fees for both of these. Now, one thing I did want to talk about before we get off of this topic is that the gold and silver prices have been suppressed. We know that. The secondary thing to that is that all of these contracts that you are seeing on COMEX, from the London Exchange, from the CME, are actually over leveraged. And if all of the bricks of gold or silver leave the vault of the CME or London, they shut down. So, with that being said, if people are taking physical delivery of gold more than they normally are, and there's 5x the contracts in futures than they have of the physical gold and silver in their actual vaults, then if people take all of that gold and silver, those markets become obsolete, and guess who comes in to fill that void? BRICS nations. So think about that when you're looking into any coins or you're looking into any contracts in the future. My bias is always own the physical gold because you have 100% sole and total control over it. A lot of people can't afford gold. So I do believe that silver has actually been suppressed more than gold really has over the lifetime of it. Silver has been touted to cost anywhere from $18 to $19 per ounce in order to get it out of the ground because you don't actually mine silver by itself. You mine other things and you find silver while you're mining them. That's why it is so much more expensive to mine silver. Now, with that being said, if it costs $19 every single ounce to mine silver, they have to refine it and they have to mint it, but the price per ounce of silver is only $21 to $23. $23. Does that sound like a decent markup to you? Does that sound like a fair market value to you? I don't think it does. With all of that being said, go look into gold, go look into silver, use my link if you happen to give a F. If you like this series, make sure that you smash that like button, make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Thank you so much for showing up to this video. I will see you in the next one. Have a good day, everyone.